Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you the end of the week update here, show you the buys we made today on Friday, not Saturday, because I know that's when you're seeing this video. And we're just going to talk about what to do now. Is this the time to buy? As we saw today, it was just an absolute teardown of almost everything. And I'll get into what I mean by everything. But before we do, if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. Let me move this seat a bit higher. There it is. And yeah, so for the day here, for the end of the week, the portfolio is closed out at $12,157.38. Down $155.55, down 1.26%. So you can see that on the screen there. For the 1 week, we're down $569.91, down 4.48%. For the 1 month, we're up $4.77, just barely staying above the positive there. 0.04% up. For the 3 months, we're down $929.88, down 7.11%. For the 1 year, we're up $352.82, up 2.99%. And for the all, we're up $1,256.85. And yeah, so we have $8.87 left in the cash account. We're probably not going to be making a purchase next week, as we'll only have enough to buy a few other shares, but there are a few other shares, a few other companies that I'm eyeing up to increase the position in. So we'll show you the buys today. Toronto Dominion Bank, ticker symbol TD, closing out at $91.62, down $1.65 today, down 1.77%. We now have 13 shares. Our total position value, as you can see on the screen, is $1,191.68. Today's return was down $19.58. And our total return since starting this position is $25.16, 2.16% performance. And it holds about 9.8% of the portfolio. If we scroll all the way down here, I can show you the buy. Bought it this morning at $9.36. Bought one share at $91.40 Canadian. And yeah, that is that one. And as you know, every week when we do make a buy, we will purchase VFV. And probably next week, depending on what happens in the market here, we'll probably still just buy VFV, a fractional buy. But as you can see here, the Vanguard S&P 500 Index ETF down to $88.64. It was hovering in the 90 zone for quite a bit, but we've seen it gradually come down. Down $2.12, down 2.34%. We now have almost 6 whole shares of this ETF. Total position value of $524.39. Average price of getting in is $97.18. It holds about 4.32% of the portfolio. Today's return is wrong, and total return is wrong as well. I'll show you the buy here. We now have purchased 0.28 of a share at $89.27, which was a fractional buy at $25. And the S&P 500, let's talk about that, because it is hit. We're just about to, year to date from January 1st to now, it is almost down almost 20%. The NASDAQ is almost down 30%. And yeah, we'll talk about that stuff, but just to give you guys kind of the comparison to the indices there. But we will head over to trackyourdividends.com to update this. If you build a portfolio today without the updated positions, you would be looking at a yield of 3.76%. Our yield on cost is 4.23% with the strategy of dollar cost averaging, annual income of $450. If we head down to TD, you can see the position here without the updated position, but we'll go ahead and update these positions here. So the ticker symbol for Toronto Dominion Bank is TD.TO. Because we're in Canada, we bought one share and the cost was $91.40. cents, and we'll go ahead and add that holding. And then we'll add another one, which was VFV.TO, 0.28 of a share. And the cost per one was $89.27. As you guys can see here, now if you build a portfolio today, whoops, did not mean to click that. We'll close that. You would see a yield today with the updated positions of 3.76%. Yield on cost for us is 4.22%. And our annual income in dividends has gone up to 454 cents. You can see here, Toronto Dominion Bank, 13 shares. We are now getting a yield yearly of $46.28 in dividends. Of course, that is divided up quarterly. VFE as well here, $6.49. If you were to buy it today, you would get a way better yield than myself. And this is what's expected for the month of June of $35 in dividends, $59 in July, and August 17, and so on and so forth. That is trackyourdividends.com, which is completely free, so you can use it whenever. You just have to deal with these ads that are always up. You can close it, and then it'll just pop up, or it'll get in the way of you clicking something. And yeah, that is trackyourdividends.com. Next, we will head over to ShareSite, which is something I do pay for to use. We'll clear that out. I already updated all the positions in here. As you can see, 13 shares of Toronto Dominion Bank, VFE, Vanguard S&P 500 Index Fund, almost 6 shares. But you can see we are pretty much down on everything. So in this calendar year, capital gains sits at $958.09 in the negative. We are down 7.34%. Dividends coming in at $168.13 at 1.29%. Currency gain, $20.69, up 0.16%. And our total return with everything included, we're looking at a minus $769.27 in the red, down 5.89%. Now, this is not as bad as just the indice itself for the S&P 500 and the NASDAQ, because as we know, the majority of the big companies in the NASDAQ are in the S&P 500 and probably make a quarter of the holdings. Probably the top 10 holdings. So in the S&P 500 are in the NASDAQ, and vice versa, like Google, Facebook, or Meta, Amazon, and Tesla, and so on and so forth. And so I'm not too concerned that we're down 5.89%. We'll just continue to dollar cost average down, because I remember we bought the Vanguard S&P 500 ETF. I think I can see it here, probably at a much higher price. That one was 92. I think we can go, oh no, we can't. But anyways, I'm pretty sure I bought it when it was below 100 at one point, and it's just slowly dollar cost average itself down. And with that strategy, you can see now we are at about $97.18 average for dollar cost average. So we've dollar cost average down with the Vanguard S&P 500 ETF. But in the market, is it time to buy? Well, I'm going to keep it very, very simple. And this wasn't any kind of sort of baiting on or anything like that. Now, I'm not one to quote the legend, the myth, not a myth, but just the legend himself. We all know the saying in times like this. And it's whether or not you execute on this properly or not. I'm just going to keep it brief. You want to be fearful when others are greedy, and you definitely want to be greedy when others are fearful. Now, I know it's a lot of cliche, but from what I'm seeing on online communities, on YouTube, on every news outlet, I think this is where everyone has been fearful. And I believe that with that quote, because no one's saying it apparently, everyone says it in good times when you're talking about expected downturns or things like that. But I think we're actually in it now. And I wonder how many people have stayed true to that or lived through it and are actually acting on it. And I had a conversation with a few colleagues today in regards to that. And they weren't even concerned that the market did what it did today, because it happened all morning, throughout the whole day. And they were strategizing on ways to get enough capital into the market, how to scrape enough capital together to get it deployed into the market, because they are seeing the opportunity here. And they were like doing calculations. I was just kind of sitting there and observing. They were messaging other people, and it was fun to see. And it's a good reminder for myself, and a good refresher to see that there are people out there that are doing what is taught or doing what they believe in, and not being scared of what's happening, but looking at the opportunity that has presented itself. I know throughout the whole year, it's kind of been down, buying, and then it's down again. And we just keep on doing that to the point where we're eventually going to run out of capital to invest and deploy in the market. But for some reason, talking with these guys today, there was something different from the conversation we had a few months back, the beginning of the year. Today, for some reason, the specific reason, they were able to deploy capital, figure out a strategy, a plan, because maybe there's something going on that maybe I'm not seeing. But what I'm seeing is that there's a lot of fear in the marketplace right now. A lot of sentiment is in the dumps. And maybe that's where this quote actually comes in. And people might say it, but let's see if you act on it. And I know I will be, as I always do. It doesn't really make a difference for me, I guess, because I buy every single week. Not true. Only if there's enough capital in the cash account. And no, I will not be doing fractional buys on the total positions here. The only fractional buy I'll be doing is on VFV. And so, yeah, that's pretty much it for the video, guys. That's all I wanted to say. Give you guys an update as well. So hopefully you guys have a great weekend, and we'll definitely see you in the next one. Bye.